you can really do anything you set your mind to. And you just need to like take it one step at a time, whether it's starting this real estate business or maybe growing to a 10 times a bigger company than you are now. Anything is possible.
Main event time? Okay. All right. So Jamie and I met Arian and her husband Chris at a mastermind event in Pensacola, Florida. I think that was over, was that 3 or 4 years ago?
Yeah, that was like 3 years ago.
3 years? I know.
2017.
So I already alluded their background and story is truly remarkable, and I'm not gonna. I'll let her tell that. She's gonna do a lot better than I can. So, but their company, GH Houses, their company wholesales and flips over 100 houses a year. They're no lightweights. They know what they're doing. They own 50 rental properties. They've partnered in another 1,100 multifamily units, 1,100 multifamily units. And now, after starting off with $50,000 in debt, starting off in the red, in negative, they're now financially free. They're financially free.
It was before 30 years old, right? Like I always like to share that because
before 30. Like, what are you gonna do the rest of your life? But recently.
Going back to New Zealand.
We're doing this.
But recently they launched an amazing project called Wealth Gym, and that's where they teach and empower others how to master their finances and achieve financial freedom through passive income. Arian's also very active on her YouTube channel, Ask Arian, where she's always dropping gold bombs. And without further ado, let's give it up for, as Nathan says, a round of applause.
Yeah, my son says a round of applause.
A round of applause. Arian, welcome.
Awesome. Well, thank you so much for that awesome introduction, Chris and Jamie. Thank you for having me. So today we're going to talk about mastering your finances and how to prepare for any crisis and opportunity. So a little bit about us. So Chris and Jamie kind of talked about it a little bit. So 2014, 2015, we started with $50,000 in debt. Really, Chris married my dad. That was all my debt. So I married a good guy. But didn't complain about that. And we just started investing in real estate, like a lot of the people probably on this call. And in a few years, we were able to get enough passive income to pay for all of our needs and wants and then more. So our first huge milestone was 2017. We were away for a month visiting family in the Philippines, and we've kind of consistently done that over the years. So today we own about 50 rentals. Chris and Jamie said, our company does 100 plus wholesales a year. We do typically about 25 flips a year, and we're mainly using our time now to show other people how they can do it too. I think most people just don't ever try to achieve financial freedom and passive income because they never really saw someone who got there coming from maybe where they're coming from now, right? Maybe you're starting, maybe you're just like working all the time and you can't even imagine not working and just having money work for you. Well, that's very possible. And I'd kind of like to share some of the tips and tricks we've learned along the way so that you can have that financial freedom for yourself. So who here has experienced any of these related to money? Fear, anxiety, stress, sleepless nights, and arguments with your wife, your husband, or loved ones? I definitely have. I remember so many arguments and so much nights where I just stayed up because I didn't know how I was going to pay for all the bills that was coming up in the business. And some of you might have these amazing businesses, but there's things that we're not really taught how to do, and we just kind of have to stumble through it. And hopefully I can share some things here where I can help you guys from having all of those sleepless nights. So you are not alone. 72% of Americans feel stressed about money each and every month. And even people who make a lot of money have gone bankrupt, right? So some people you might know are Nicolas Cage, 50 Cent, Larry King. So there's at least one conclusion. A lot of people have problems with money. And the second one is more money isn't the only answer, because you can have all the money in the world but still be stressed about money. So our initial why was our family lives in New Zealand. So that's why there's sheep there. I was actually born in the Philippines. We moved to New Zealand when I was like 16. And so my mom and my sister and my brother still live in New Zealand. And our why is to just be able to, since we live in Florida, we can see Chris's family all the time, but we wanted to be able to see both sides of our family. So this was, I think, last year when we were in Disney World together. So my family flew all the way here. We spent a month traveling around Florida, Louisiana, and like just the southern states together. So that was our initial why. But as we went through our journey, initially we thought that we didn't have the money to do all that. But really looking back, now and talking to my 25-year-old self, like now I can tell myself, you know what, like the money actually was there. I just didn't manage our money the way I needed to manage it that prepared us for any crisis or something that we needed to pay for, right? It was like a good wake-up call for me to manage money or money will manage me, right? So manage your money or money will manage you. So the good thing is there is a better way. So first, let's think about what causes all those negative emotions we talked about earlier. Like it might come from thinking this: I'm not 100% sure what my money is doing right now. I know I have it, but I'm not sure what exactly it's doing. I don't know whether I'll have enough money, right? And I'm afraid to make a change or invest because of these two things. I'm not 100% clear on what my money is actually doing. So how do we fix that? First, we're going to create a system that always allows us to see what our money is doing. Then we'll create a system to show us where money is coming from. And then we're going to create a system that will give us the confidence and safety we need to keep investing and making that change that might get you to a better state. First, we're going to get clarity and know exactly what our money is doing. So the way we do that is having a money plan, which is a clear picture of our goal and what we make and spend. Having a cash flow projection, so we can look not just at what happened in the past, but we can see what's about to happen in the future. Then we're going to have a safety net and cash reserves to prepare for anything that might be a surprise. We're going to get access to more cash. We're going to learn how to pay ourselves first and make money work for you instead of working for money. And we need to invest for cash flow to do that. So first, we're going to talk about our money plan. When you think about your money plan, you want to figure out what your goal is, right? Like maybe your goal is to retire in 5 years with $10,000 a month in passive income. Or maybe your goal is to have $1 million business that gets you, $500,000 in net profit. Whatever that is, you want to know what that goal is first. Now, when you have a clear picture of that goal, you want a clear picture of what you make and spend right now. And then you want to figure out the plan and fund that runway to get to your goal. So here's an example of a personal money plan, right? Some people might call it a budget or whatever it is you call it, right? You want to know what you make, what your passive income is, what your expenses are per month, and the gap is the difference between what you make and what you spend. So you want to make sure your gap is always positive each month. And then now we're going to switch over to our business side because I know most of you are business owners. So you want to create your business plan, right? So if you have a flipping or wholesaling business, you want to figure out what your target gross profit is. And you probably know what your average deal size is, right? Like if you're wholesaling, maybe it's $10,000, $15,000. If you're flipping houses, maybe it's $25,000, $30,000. And from that, you can figure out how many deals you need to do. If you want to have a $300,000 gross profit business and your average profit is $30,000, then you need to do 10 deals. Next, once we have our goal, which is the gross profit goal, we want to figure out what resources it takes to get there. So it's people costs. What are you going to pay the people? And if you're the people, you want to figure out what you're going to pay yourself. And 2, systems costs. And these can be marketing, some of the systems and websites and things that you pay for. So here's a sample business plan for a sample business owner, right? Their goal is to have $400,000 in gross profit, and their average deal size is $35,000. So they know that they're going to need to buy a deal a month and do 12 deals a year to do that. And on the left side, this is just a sample breakdown of what they're going to do with their profit. But it's really important when you're starting your business that you have some sort of breakdown like this. It's probably going to look different in your business, but if you don't have a breakdown of where the profit is supposed to go, then you might end up with a really big business that has no profit. Now, once you have that goal, part of that profit plan was what you were going to pay for your operations. So now you're going to go deeper into your plan and figure out what exactly are you going to pay the people that you need to hire, and then what are you going to pay for systems. So again, this is just an arbitrary example. It's going to look different from company to company. But once you figure that out, then you'll know how much funding that business needs to sustain itself for a minimum of 6 months, right? A lot of times people bootstrap this. Like I know we bootstrap this a lot in the beginning. So we might have had to pay ourselves, X amount of dollars, but we kind of just took an IOU in the beginning of our business journey. And that's fine as long as you remember that that's an IOU that you're supposed to pay yourself. And the reason why you want to fund that initial runway in your business is because business is already like incredibly stressful, and you have to grow and learn so much, not only as a person, but as a business owner and as a leader, that you don't want to like worry about whether you can pay yourself or pay your one employee that you hired, right? So you want this straightened out so you can focus on actually growing the business instead of finding the money. The other thing I want to talk about is funding certain accounts. So one thing that all of us are going to have in common is we're going to have operating expenses, right? And that's what most people think when they have a business. So we want to fund that. But the other thing that like we missed in the beginning is funding our rehab projects completely. Initially, we just thought, hey, we have the purchase price and the renovations, and if we fund those two things, that's it. That's all we need, right? But what we found out was there were actually a lot of other costs that added up. And when we were doing 1 or 2 flips, it was fine in the beginning. But when we did 10 and 20 flips, the holding costs and the money costs that added up each month was like tens and tens of thousands of dollars. So that was really stressful. And that's why we had a lot of sleepless nights, because we were making all this money. There was so much money on paper, but we were just hemorrhaging money every month because we didn't raise the money for the holding costs and the money costs. So if you are a rehabber, you want to raise all of that and pre-fund it so that you're not stressing out about money, but you can focus on actually growing your business and making your business as good as it can be. If you're a rehabber, fund all of those costs and put them in a separate bank account, separate to your operating expense budget. And I say that because we've done this before where, okay, all of you guys have probably worked or tried to work with contractors. And you've all probably worked with a contractor that started on your project, you gave them a little bit of a deposit, and then they disappeared. And they're like, oh, I already did my work. The reason that happens is because like they were robbing Peter to pay Paul, right? So they took your money and put it in like the person before you's project, and they kind of just kept doing that loop. And then they ended with you, and now they're out of money. They don't have another Peter to rob. So we do that, unfortunately, in our business. Well, we did that, right? Like we had this rehab money and we had our operating expense money. And when we started realizing that we actually needed more money on the rehab side, we started kind of robbing our own operating expense budget. So that kind of just made the problem worse. So if you haven't gotten to this problem yet, make sure you fund that whole rehab cost in the beginning so you don't rob yourself to pay Paul. But yeah, so you want to have 2 bank accounts, one for your project costs for your project, and then one for your operating expenses. Those are separate. And you want to have that discipline, not to rob yourself. Don't rob Peter to pay Paul. Okay, so there's different ways to fund the business. You can either fully fund it from day one, or you can bootstrap and reinvest. Now, the other way is to start at a drastically lower profit goal. Maybe you're thinking, hey, I want $1 million business. But when you're calculating all the numbers you need to like fund it for 6 months, you're like, well, I don't have that much. I only have like half of it. Then what you want to do is you probably just want to start at that lower gross profit goal, like the one that you can fund. And then once that's profitable, you can reinvest that capital back into growing it into the $1 million business. And the problem is, this is a problem with a lot of business owners. We get stuck in number 2, where we're bootstrapping our business and we keep like working for free, or like saying that later when this happens, I'll be able to fund everything. But that day never happens because we just keep like going back into the same cycle with bigger numbers. So you want to just have a discipline and like cut that off at some point because your business is probably profitable at some point, but you're just not treating it as a profitable business. And if we can't afford to pay ourselves, right? If we have to keep working for free to keep the business afloat, do we really want that business? This also helps you like reevaluate what you're doing. The good thing is it also doesn't necessarily have to be your money. So like Chris and Jamie talked about earlier, you can work with other people. Some people want to be completely passive and earn a return on their money, while others want to be a little bit more hands-on and do the active work. So those two people can come together and you can be the active person and they can be the passive person, and you can raise funds from other people for that. So you can have private lenders, a combination of private and hard money lenders, use lines of credit from your bank and all that kind of good stuff. Okay, so imagine this. You're driving down a road and instead of looking at the windshield, you're looking at your rear view mirror and you're trying to drive purely from looking at your rear view mirror. That is a recipe for disaster, right? But unfortunately, as business owners, that's what we do. That's usually what we do. We look at what happened last month. We look at our bank account. We look at our balance sheet and profit and loss. And that's all we base our decisions off of. Now, what we discovered over the years is we actually need to have a crystal ball, right? And obviously nobody's crystal ball is going to be perfect, but we can create a report and have a projection, which kind of acts as our crystal ball. So we can see where our business is going and we can make adjustments today because of what we project in the future. So this projection sheet is going to have what income you have coming in. Do you have any wholesales? When are they closing? What's the projected profit? Or do you have any rehabs? What's the closing date and what's the profit? So we're going to show you these sub-reports that help us project that business cash flow. So it's these three things: your deal profit projections, your operating expense budget that we already kind of covered earlier, and bringing those two together is your actual monthly cash flow projections. And if some of you are like, doing screenshots, I'm going to give you a copy of these at the end, so you don't have to like scribble super fast. I really want you to kind of get the concept and get the idea of what we're using these for. So make sure to listen, and then we'll give you a copy of these at the end if you want them. So deal profit projections. Really, this is just us writing down what deals we have on the books, when they're supposed to be selling, and what we're projecting to make as a profit. So that's all this is. I don't want to get too much into the weeds. And then we're going to take our operating expense budget and we're going to combine them into a monthly cash flow projection sheet. So what this is it combines both of those two things, and it shows us when the money is coming in and when the money is going out, how much is going out. There's another column we use to balance out what we actually spend, comparing it to what we projected to spend, and then what the balance is in our account, right? So that's what this is doing. And for example, again, this is just a hypothetical example, but this person, let's say they were doing really well, right? If you see in June, they're doing great. They just started their business in January. By June, they've already like broken even, right? Like they're making as much as they're spending and they've already funded their runway again. But they stopped buying houses, and let's pretend today is June and we were looking at this sheet. Well, you can see that by November, they're about to run out of money, right? So if you were this business owner, you can see that happening and you can lead your team the way you need to lead your team. You can say, hey guys, we really need to buy 2 houses a month. We're doing really great right now, but we need to buy 2 houses a month to hit our goal. And, they can focus on that instead of kind of like focusing on 10 different things and then seeing later that, oh, wait, it's November and we ran out of money, right? So that's what we use that for. And the great thing is, if you don't like how things are, you can change it. You are not a tree, right? So if you see, when you have that crystal ball, the cash flow projections that you can see into the future, if you see something you don't like, you can make the changes now versus later when it's too late. Now, what if? What if the projections don't pan out? Maybe a deal doesn't close on time, or there's a personal emergency and you can't put in that many hours that you normally do to get the production that you need from your business. Well, that's where a safety net comes in. And this is really important for our business and our personal lives. Think about what the people who have mastered their money are doing. They have a safety net and they have cash reserves, especially more during times like this. If you've seen a lot of the articles about what the wealthy people are doing, right? They're raising a lot of capital. They're keeping a lot of liquid assets right now, a lot of cash, because they know that things are changing. And with change, they can weather a lot with cash reserves, and they can also afford to hop on opportunity so much faster with those reserves on hand. So think about this, like, what is your personal safety net number, right? For us, it's 6 months of our monthly needs and wants personally as a family, right? So we have that in a relatively liquid account, and we just keep it there for a rainy day. And what's your business safety net number? So for us, we typically keep 3 to 6 months of our business operating expenses in another relatively liquid account. So we know that if a deal doesn't close on time, or maybe we bought too many houses, we didn't expect we're going to close that soon, we have that to use, and we're not scrambling to find other capital. The other thing you want to do now is get access to more cash. The best time to find more money is when you don't need it. So right now you might be thinking, well, I'm good, I'm doing this many deals and everything's fine. But you probably also have an inkling that there's going to be opportunity coming up here in the next 6, 12, 18 months, right? Well, you really need to tap into that capital now, because in 6 months, when the opportunity is here, it's a little bit too late. Someone else would have tapped into that capital, and you're not going to be able to like grab the deal that you might want to buy. Right now, tap into lines of credit. A lot of the rates are like super low. So see what you can get there. Also consider cash out refis if you don't have access to lines of credit. Talk to potential private money partners. Because when you get that deal, you're not going to be able to say to a new private money partner, hey, I have this, awesome $1 million deal. I need 100 grand right now, right? Like, you can't do that right now. You got to build that relationship over time so that you have access to it later. And also talk to some strategic partners. So maybe you know someone who can raise millions of dollars, like Chris and Jamie, right? Like, build that relationship now. So 6 months, 12 months from now, when you have an awesome opportunity, they already know you. They don't know you as the person who's never talked to them, right? So build those relationships now. Next thing we're going to talk about is to pay yourself first. And this is like a huge mindset shift for a lot of people. And I know it definitely was for me. Because in the beginning, I was just, I'm just going to like put everything in. I'm going to just work. And I know it's going to pay off at some point. But if you own your own business, you're the person who tells you what's going to get paid out, right? And if you don't actually like make that shift of, instead of just putting everything in and waiting for that arbitrary when, then it's never going to happen. So you want to figure out your expenses by this formula, right? Normally, it's gross profit minus expenses equals net profit. But really what you want it to be is your gross profit minus your desired net profit equals your expenses. Because otherwise, if you think about, and I forgot what that's called, but like that law where, everything expands to the time, or Parkinson's law, everything expands to the time you have, right? Like if you have like 1 hour to finish an essay, you're going to take 1 hour. If you have 24 hours to finish an essay, you're going to take 24 hours. Well, it's kind of the same thing with expenses. If you have $50,000 you can spend in your business, you're magically going to spend $50,000. If you only have $20,000 you can spend, you're going to magically make everything happen the same way, not with $50,000, but with $20,000. So I challenge you to do this. Use this calculation to figure out what you need to do for your business or maybe your personal life. And I promise you, you will somehow find a way to get the same things done with less expenses. And same thing with your personal life, right? So we call our savings each month our gap, because we think that's the real gap between the rich and the poor. It's not really what we have and like our net worth, but it's how we spend the money we have. So in your personal, same thing. Like, what do you want to save each month? What do you want to invest each month? And do that calculation. What's your income? You deduct what you want to invest each month, and that leaves you with the expenses you can spend, right? And I promise you, Parkinson's law will do its thing. You will find a way to spend less if you actually have this goal to invest a certain amount each month from your gap. Let me go back to that quote. So one of my friends, Andy, talked about this quote, right? Will you choose to sacrifice early or be forced to sacrifice later, right? Really, most people end up arbitrarily choosing to sacrifice later because they don't even know that it's possible to do all this. But today, you can choose what to invest instead of just getting the leftovers for yourself in your future. All right, here's our last point. Make money work for you. If you don't find a way to make money while you sleep, you will work until you die. And nobody wants that. You want to create passive income that first exceeds your needs and then your wants. And then after that, it almost becomes impossible to deplete your safety net ever again. And once it's like critical mass, right? Like once you have passive income and you don't really spend all of that passive income, then it just keeps growing, growing, and growing because you don't even have to do anything, right? Like it just makes your money just makes more money that you don't spend, and that money makes even more money. So it's like magic. Now, the way you do that is by investing for cash flow, right? With a lot of the uncertainty in the market, you really don't want to count on market appreciation right now, right? Like if your plan right now is to like buy something and it goes up in value, whether it's real estate or stocks, that's probably not a very wise option right now because we don't really know if that's going to happen. But if you invest for cash flow, let's say you buy a rental property and it gives you income every month. You invest with a flipper and they give you interest income each and every month. Then that is something you can count on, right? Because like the tenant owes you rent, the flipper owes you interest. It doesn't matter whether the market's doing well or not doing well. You are still owed that rent and that interest. And that's something you can count on. If you're flipping houses, that's forced appreciation, not market appreciation. And you just want to consider that if you are flipping houses, you really want to get in and out in 3 to 6 months to combat any, like bumps in the market. So we have some levels of financial freedom that we're going to share here. So stage 1 is destroying high interest debt. So you want to pay off any high interest debt that you personally have that's more than 6%. Then after that, you want to build your safety nets. You want to build that 6 months of personal reserves. Then after that, you would start investing to have passive income. And once your passive income reaches a point where it pays for all of your needs, which is your housing, food, transportation, health expenses. Once it pays for all of those, then you've reached level 1 financial freedom. And we call this living in peace because now you don't have to work, you just choose to. The next level above that is level 2, living in comfort, where your passive income pays for your needs and your wants. So you're comfortable, you're eating out whenever you want to, you're traveling whenever you want to, you're living in the house you want to live in. All from passive income. And then everybody should aim to be here living in abundance, where your passive income is way more than what you need for your needs and your wants. And you're able to really do what you want with that money. You can give to causes you want to support. Maybe you want to support your family more. And what I want to share with you guys, that is possible. You just need to make that your goal. If that's your goal, I guarantee you will find a way to achieve that. And you already have a great resource here with Chris and Jamie's meetup. Okay, so here's how you calculate how much money you might need to do that, right? So your freedom fund is how much money you need to invest to have financial and time freedom. So you get this by getting your yearly passive income divided by the rate of return. So what's your target passive income? Let's say it's, maybe for needs $50,000. Let's say you need $50,000 a year passive income to feel like you don't need to work. And you divide that by your target rate of return. So maybe that's 10%. Maybe you can get a 10% return on your money. So here we go. Oh, I already have an example here. $60,000 is the example. $60,000 divided by 0.10 is 600K, right? So you just need $600,000 invested at 10% to make a 60K a year passive income. And that would get you to level 1 financial freedom. And this is just another example, kind of going through the level 2 version, living in comfort. Maybe you want 120K a year. Then you would, from that calculation, you would need 1.2 million invested at 10%. Anyway, tying this all together, we just want to make sure we have clarity. We know exactly what our money's doing. And to know that, we need a money plan and our cash flow projection. Next, we need a safety net and cash reserves. And this is really, 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 really important, guys. Like, this is what we didn't have when we were super stressed out, couldn't sleep. If you have this, you will have a much better personal life and business life. And right now, especially as we're preparing for more opportunity, you want to get access to more cash. You want to learn how to pay yourself first and make money work for you versus working for money, so that you can have the passive income from cash flow. And I just want to end with this. If we can do it, you can do it. We really didn't know what we were doing like 4 or 5 years ago, but we just started taking action and we got there. So here's where you can get a copy of those cash projection sheets. It's actually like a whole like Google sheet, and we have like videos that you can watch on how to use it, like how to fill it in and all that. So go to wealthgem.com/RE hacking, and you can get that download. And I'd also love to connect with you. I have a YouTube channel. Go to Ask Ariane and subscribe. We typically post 2 videos a week on real estate investing and making money. And that's my email down there. But yeah, thank you so much, guys. Appreciate you guys. I know you guys wanted to look at the polls all this time. Hopefully you spared some time looking at my slides.
Yeah. And hang out for a couple more minutes, folks. All right. So questions, any questions? And I know it's always like crickets for the first question, so I'm gonna break some ice here. You answered one question that I get a lot, and that's, do you pay off credit cards or do you start your savings funds? So you answer that first, and it seems common sense. Like, you don't want to pay 18% interest on a credit card when you have money just sitting in your bank earning like 0.01%. Like, that doesn't make sense. But the follow-up question I would have to that is, say you have $20,000 or whatever in credit card debt, and you're making money, so you're not like in a negative cash flow situation, but you have an opportunity to either pay that down or invest in a cash flowing rental property. What would your advice to that person be? Focus on knocking out that debt or buying the cash flowing asset?
Yeah, I think it really depends on what the interest rate on the debt is on the credit card, right? So when I talk about high interest debt, I typically mean 6% or higher. So let's say the credit card debt, yeah, so like 10%, right? Like, that's kind of a low credit card interest rate. And maybe you're saying, should I pay off my 10% debt or should I make 10% in cash flow, right? And you think, oh, that's equal. So it might be like a 50-50. But you want to consider that with that, like, when you pay that off like today, that's gone today, right? Whereas when you're investing in something, typically there's a lag, right? Like, even let's say maybe I'm investing with Chris and Jamie and they have a deal. If they're coming to me today, that's probably not going to close for like 2 or 4 weeks, right? You kind of lose out on like 15 to 30 days worth of whatever that 10% equals to. And then you also have, sorry, Chris, you were saying something? Oh, and then it's also guaranteed, right? Every investment there's always some level of risk there. And when you pay off debt, that's a guaranteed return, right? Like, where else will you find whatever percentage it is guaranteed? Mm-hmm. So if it's like that close, I would suggest paying off the debt first. But if it's like it's a 20% return on the investment and your debt is like 8%, 10%, then it probably would make sense to get the cash flow and pay down your other debt with the return from that cash flow.
Yeah, so you made a really good point. And paying off the debt is a guaranteed, think of it as an investment. I mean, it's really savings, but it's a guaranteed return. And if you're looking at a whole bunch of options, maybe you could invest in stock, maybe you got a couple rental properties or whatever that would get you whatever percentage, figure out what those returns are. But at the end of the day, every time you pay down that credit card or make a $5,000-$10,000 payment or whatever, you're getting a guaranteed return on that money. And of course, you all see the statement on the credit card, like if you make the minimum payment, it takes like 1,000 years to pay it off.
Right.
So it's actually probably a little bit higher than what that interest rate. Your return is really higher than that because of compounding interest. So
And there's also, I also want to point out there's an intangible benefit to paying off your debt. Like just the level of like peace and confidence you have knowing that you're at like a good starting foundation.
Mhm.
And maybe you're like a daredevil, right? Like, and you're like gung ho, woo, let's go, keep going. Like all bets on this investment. Like you also want to consider the other people in your family, right? Because usually if someone's like that super charging, right? Like usually your counterpart, your other family members are not. So like even just from a non-tangible, like where we have a good baseline foundation, like that actually gives you a huge boost. Like we had $50,000 in debt in the beginning and our interest rate was pretty high. It was like 8% or something. And yeah, we could invest in real estate and usually that gets us a 10, 12, 15% cash flow, depending on how much work we put in ourselves. But we chose to pay off the debt first because we just felt a lot more confident investing after we knew that we could like be responsible for our own money and our own debt and pay that off. And then that helped boost our growth that much faster.
Yeah, the freedom of a reset, which paying off debt does that for you. That's absolutely true. And then also another point you just kind of ended on is the ability to accelerate once you've gotten a handle on basic personal finance, like the ability to accelerate from that ground zero forward with the right financial principles is so much faster. And I would imagine, just guessing here, that's how you were able to do what you did so quickly, not because you did anything magical, you just followed sound financial principles, right?
Yeah, and that's why it's so interesting because there's sometimes we think, yeah, more income will fix, and it does. More income does fix a lot of things, but it also doesn't fix certain things. And there's a lot, like if we just focus always on like growing our income and like growing our business without kind of making sure we're kind of operationally sound or like have a good financial management system, then, like when you start something, there's always like holes you got to fill, right? Like, oh, like I'm not as efficient here or here or here. And when you grow that, guess what? You just have more things going out of the holes, right? So you're still kind of in the same position, just with larger numbers, which really usually has larger risks.
Right.
And then any type of market shift or maybe a bad campaign or deal, like now not only did you not make money, but you're still hemorrhaging your operation expenses.
Yes.
It can shift on your
reserve comes into play too, that you were talking about. Having that reserve in your business is just so important because especially in this business, there's always a cash flow,
Yeah, we're a very cash heavy business.
Yes.
Real estate is like a vacuum to cash. Like it sucks
really
all of it out. And unless you've got to be like a gorilla and being in charge of
right,
that.
Yeah. I mean, even just like appliances these days, right? I'm not sure. I don't think any of us were like expecting appliances to go like 50% more expensive this year versus last year.
What about fences and lumber?
Yeah, I mean, it's insane.
Just got a $7,000. I didn't even mention this on a rental. A flip. Which one is this? Oh, we're not spending $7,000, but there's the fact that we got quoted $7,000 to replace a fence. I'm like, what is going on? Yeah. Like I can do a roof cheaper than that. But anyway. All right, Ari. So any final comments or how people can reach out to you? And then I'm all tie it up with that special gift I was promising everyone.
No, like I think if there's anything I want to say is if you can really do anything you set your mind to, and you just need to like take it one step at a time, whether it's starting this real estate business or maybe growing to a 10 times a bigger company than you are now. Anything is possible. You just want to make sure it aligns with your goals for one, right? Like don't do it for the sake of the 10x number. But two, it's really just that one step at a time. Just keep at it. It's not going to be smooth or easy. I promise you that, but it will be worth it because you're doing it for whatever reason you're doing it for. It that's worth it. So just keep on going.
All right. Okay, so 2 more minutes, and I'll let everyone get back to figuring out which half of the country is going to be mad for the next 4 years. I promise they're going to be telling these things for a couple more hours. You got plenty of time to follow the news. All right, so raising private money, like Arian mentioned, having access to cash either on new deals or on ongoing projects you have, super important. Liquidity is vital for this business. The ability to raise private money is also vital towards being liquid and being able to fund your projects and being successful long term. So a business partner of mine wrote a book called the Private Lender Playbook. And if you want to find a way to make copy, I've got a free copy for you. The only thing I ask you to do is on our Facebook page, click the like button. Hopefully you went to our YouTube page and subscribed as well. But on our Facebook page, click the like if you haven't already. And then you're going to see the send message. Go ahead and click that send message. And when you click the send message, it's going to pop up some questions and you're going to get the opportunity. You can click on, yes, send me the book, and we'll get the book sent right over to you on an email. And hope you enjoy it. Give feedback. Be sure to comment if you like this, like it, comment. And then I guess the last thing I had is we'll be back here live next first Tuesday of the month in December, and then we're going to try to go live. And then we do have another workshop coming up next week on how to build a rental portfolio, but also how you can be a millionaire in 3 years and build $1 million rental portfolio in 3 years. We're going to be talking about that. So thanks everyone. Thanks, Arian.
Thank you so much. That's really good. And again, she is with, did you want to give another shout out to Wealth Gym or?
Yeah, Wealth Gym. You can use, the best way to reach me is with like the YouTube thing, because I'm there like 2 times a week. So ask Ariane on YouTube, and then wealthgym.com/RE hacking is where you can get a copy of those cash flow sheets.
All right. You heard it. All right. Thanks, Arian. Thanks, everyone.
Thanks, guys.
See you next time.